All right. Welcome back to the Real Estate Locker Room Show, folks. I'm your host, John Carney, and thank you for taking the time out of your busy day to spend some of it with us. I'm truly grateful for all you return listeners out there. I say it every time, but without your support, there'd really be no reason to keep this podcast going. So I know your time is valuable, and I appreciate you, spending a little bit of it with us and learning from the compelling stories. We've got a great guest here today, Hamza Ali, who's moved from overseas, and we're gonna, dig into his success story here in a moment. If this is your first time tuning into the Real Estate Locker Room Show, welcome to the show. We have a goal here. It's super simple. We want to give you some actionable advice to help you elevate your real estate investing game today. Whether you are continuing along your journey, let's raise the bar, or if you're thinking of getting in off of the sidelines, we're going to give you something to think about and hopefully get you started. So with that, we're up to episode number 96, and I'm going to introduce you to Mr. Hamza Ali. Welcome to the show.
Yeah, thanks for having me, John. I'm really happy to be here and discuss, my journey and hopefully inspire a couple of people who are just starting off in their real estate journey.
Yeah, awesome. Well, look, here's my 2 cents. You've got you're joining us. You moved from Dubai, which I want to hear about. And I love the resilience that come from people that move to a foreign country and figure things out, start a business. It's the entrepreneurial spirit. I don't want to be cheesy and say it's the American dream, but, that means different things to different people. But I come from, grandparents that immigrated here as well. And that story, that narrative was a big part of my life growing up. But with that being said, I like to explore the intersection of competitive sports and competitive real estate. We're in a competitive space. Well, you're down in Houston, I'm up in Cleveland, and, you got to be willing to grind it out to find the deals and then make them work. So we're going to get into your story about the success in the multifamily space, but, let's stretch out a little bit and warm up. How about that?
Yeah, sounds good. Let's do it.
So, growing up in Dubai, I've been through the airport. I've seen it from the air, an amazing place. But, are sports a big part of the culture? Were you playing sports as a kid?
Absolutely. So growing up in Dubai, you play soccer on the streets, barefoot, for the younger portion of your life until you can afford to buy some really good sporting gear. And then you get into it, right? We have local clubs just like everywhere else in the world, and it's highly competitive. And believe it or not, it's a very good icebreaker, or could backfire sometimes depending on which team you're with.
Right. So I mean, did you grew up? Sounds like you grew up playing in local clubs. I mean, was there a standout star or an athlete around the world that we might not know about here in America that inspired you?
Well, I mean, as far as athletes, there were a bunch of them, but I will say that Dubai has a lot of clubs, and we have a lot of foreign players that the clubs buy just because of their skill. We have, I don't know if you know this, but Maradona, the Argentinian football player, actually now coaches for one of the clubs in Dubai. And he was an inspiration. He, of course, was part of a huge drug scandal, which is why he left Argentina, the national team, and then started coaching, kind of reset his life, and started coaching one of the teams back in Dubai. And that team has been fairly successful. So that is kind of like, I would say, top tier sports club that we have, or soccer club that we have in Dubai, that everybody is kind of like head over heels for. Other than that, the European League is a very large contributor to the soccer culture in general. And so everybody who is from Dubai, from the United Arab Emirates, or from the Middle East is very embedded into European soccer club culture as well. So you have the Real Madrid, you have the Barcelona, you have Juventus, and those are just a few of them. Manchester United, of course. And so, it's a very, very highly competitive local and international experience there.
And it's gaining traction here, right? Which is nice to see. But you said something that, we talk a lot about athletes on this show, but you mentioned a coach, and you mentioned a coach that as an athlete may have had an indiscretion, but he was able to move overseas and reinvent himself. And
Absolutely.
if I don't want to speak for you, but you've moved from overseas to America, and you've started a business, and you've gotten into the highly competitive space of real estate. And that's a journey in of itself. And I don't know if we can do it justice in a short amount of time, but I really want you to focus, share that success story with us, and let us know of how you overcame what I'm sure are many challenges, coming into a foreign market's tricky enough. And by that, I mean, just moving from state to state and being away from your network. So how were you able to do what you have been able to accomplish?
So I'm the founder and CEO of Gray Spirit Capital. Today we manage just under 1,000 doors in the multifamily space. We focus mainly on the garden style apartment community. So we like acreage properties where people can kind of move around and have space. We've also found them to be very effective, very efficient as far as cost and our bottom lines and the occupancy levels. But before all of that, I was just another guy who moved to the United States looking for opportunity. And this is a very interesting story because I actually came here for a visit to visit some family that I had. I had an aunt who was a school teacher, and she taught in the local school district, so public school district. And she just called me one day and said, you seem like you like real estate, you're interested. Why don't you come and check out our little neighborhood? And this was no metro area. I'm talking like suburban or rural almost area based outside of Houston, Texas. It's about an hour away from Houston. And so I was like, okay, let me come just pay you a visit, see what that's like. Packed my bags, told my wife and kids I'm going to be gone for about a week. Landed in the US, landed in Southern California initially, spent some time there, then moved to Houston because I realized Southern California was way too expensive. There's no way I could do any business there with the little amount of money that I had. And from Houston, Texas, rented a car, drove about an hour west to Katy, Texas, and then stayed at my aunt's place for about 8 months. I told my family I was going to be gone for a week. I was gone for 8 months, did a lot of due diligence, had some money in the bank. So I didn't start from zero. I sold a small business that I owned in Dubai. So I came here, I want to say with like a couple $100,000 and just stayed here and processed immigration, learned how the US does business because it's completely different here. Dubai, transactions are done almost 90% in cash. We don't have we don't have a debt structure set up in Dubai, and there is really no liability component or aspect when you buy real estate. So it's very interesting. So I got to see all these people transact, of course, when I lived there. I had never done it on my own. When I came here, I had read that book by Robert Kiyosaki, Rich Dad, Poor Dad, and that is kind of what ignited the fire and started my journey in real estate investing here in America, because he talks about leverage and how to use leverage correctly. And not all leverage is bad, right? Some leverage can really help you. So I moved here to the US, found a piece of land, wanted to develop it, went ahead and developed a small office warehouse business park. So nothing to do with multifamily at this point. I was doing like basically the best bang for the buck at that time. And that's all, that's the kind of money I had. Finished one project, sold it, got some investor attention at that point. And I was like, okay, that's it. We need to jump into multifamily because apparently at that time, there was a lot of interest in the multifamily space. And I'm talking this is back in 2014. So I got a lot of people around me interested because I had successfully now bought a piece of land, built it, sold it. And that took me about 1.5 years to do since I got here. And then bought my first 24-unit multifamily community in a Class D neighborhood because I didn't know any better. So it was a very tough process. And with 24 units, you can't really justify hiring people. So there was no property manager on staff. There was no maintenance guy or person or team or crew. It was just me. and whoever I could find to do the odd jobs here and there. And at that time, I got lucky. When I bought the 24 unit complex, I found a tenant who was the existing handyman. And so he kind of helped me out a lot, actually. Helped me collect rent, guided me towards, what the process is, what the legal process is. I used to get a lot of evictions back then, obviously, because I didn't know what I was doing. And I didn't even know what the rules around collecting a rent were at that time. So started with 24 units, then quickly found out that there's a lot of investor interest, and got into the syndication business model, which I found fascinating at the time. So for the first time, hired an attorney, paid them a decent amount of money to kind of create the GP LP structure for me and send out all these documents to investors. It was really exciting. And then from there, did 11 syndications after that, obviously larger communities. So we started at 24, then we went, I think the next one was like 40, 46, and then went to 60s, 70s, 80s. And now we like to acquire stuff between about 100 to 200 doors at a time. Raising money has become fairly easy just because of the network that I've created. But, like I said, when I came here, just a regular guy looking for opportunity, and found myself in the multifamily space out of all things, and just decided to stay there. It's been a good market.
Congratulations. I mean, and it's for those just listening, he's giving you the highlights, but I want to just go back to your first development. It only because it's a very similar story to something I did living in Australia when I went from my core business into real estate development, which was buying a piece of land with partners. I didn't have any assets in Australia at the time, and I was running a startup, so I had to find other people, to join in. We had a builder on the team and a seasoned real estate investor from Melbourne who also had, who had a finance company that could put together the loan as long as my underwriting went correct, which it did. But, through that process, do you feel that the people you met by doing that project, you call it, whatever size project it is, large or small, you do meet the people in town, and you build your professional team that way. Did you see carryover with the accountants and the lawyers and the bankers and the title company through all of that?
Yeah. So first project, very interesting project. I landed in the US. Like I said, I had a couple $100,000. I think it was $280,000 that I paid for that first piece of land that I bought. And I bought it all cash. And then based on what I had read in the book, now I had to go and talk to a bank and kind of secure leverage against that so I could start construction on the project. So I bought the piece of land, walked into the first local community bank and told them, okay, I'm here, I've arrived, right? I'm in America and I wanna build. And they're like, hold on, this is not how it works. I'm like, what do you mean this is not how it works? I have the land, it's all paid for. You can use that as the book said you could use this as leverage against
Chapter 5, yes, Mr. Banker, exactly. Right here.
And so the banker said, okay, where's your tax returns? And I said, what tax returns? And they're like, well, we need 2 years of tax returns for you to, for us to even think about giving you a loan. And I'm like, oh shit, I never thought of tax returns. And so I kept bouncing around until I found a partner who was willing to sign on the loan on my behalf. So silent partner took a portion of the GP interest in the project. So the general partner interest in the project. So essentially he became my partner just for signing on the debt for me because he had the tax returns. And what I found is that talking to bankers really helped me because the banker actually introduced me to this person. The banker who wanted to close the deal, who wanted to give me the loan, actually told me, you know what, why don't you call this friend of mine and he will secure the loan if the project makes sense. And so it was up to me now to convince this gentleman who I'm very good friends with till today to give me a loan and help me complete my first project. So of course the network, the team is very important. You need to keep knocking on doors. So I will tell you this, I talked to about 20 banks before I found the one bank that finally came up with a creative solution. So I did not give up. I had not thought of the solution at that point on my own. It was something that was kind of thrown out there and I was like, okay, that's great. As long as I can find somebody to sign on the loan for me to get this thing going, I'm going to do that. I had also met my engineer and architect at a local real estate meetup. Back then, we didn't have Meetup, the app. So we had like these, we still have these local real estate clubs. So, and they had like a forum type product. So I attended one of their events and I found an engineer and architect that were willing to work with me. So I used them and I still use them till today to do all my like drawings, architectural work, MEPs, and all of that. As far as lenders, I have since then moved on to multiple lenders, obviously, just depending on where I get the deal. But initially, when I started, it was all just one banker telling me to go to somebody who I had no idea who they were, right? And it was more, I had to trust my banker at that point to get this deal done. And when we sold, by the way, when I sold that project, that person got paid very well for just signing on the loan. And that was the price I had to pay at that time, but it was the only way to get it done for me. So I had to do it.
See, I mean, here's what I like about the story, and in my advice, maybe my advice, and you can echo it if you agree, is that if when you're new to something and you're gonna see it through to the end, especially if you have your life savings sunk into it. But regardless of that, I find that anywhere when you're new and you're trying to learn about a market and learn how a new system works, people are generally very open and receptive to seeing you be successful. And that sounds like your story in Texas, my story in Australia. And I think it plays out around the world. Anywhere someone's going into an industry where there's people who have the network, the knowledge, and the experience to help you, achieve your goal, and can bring in, and you kind of have that one lucky opportunity to be asking questions because you know nothing. And would you agree that people were very receptive? I mean, we want to see people follow their dreams and help them get the courage, if that's the right way to put it, to go out and take some action. And it sounds like that was your experience, hands down. And from that, that one project, multiple projects have grown over the years, correct?
Absolutely. So, I mean, think about it. If I were to go and try to do everything on my own, it would just take me more. I would, I would eventually get to where I want to get to, but it would take me much longer, I guess, to get to that destination, right? Whereas when I had a team and people helping me out and supporting me, I could do all of that. I mean, I've only been here for about 6 years now. Sorry. So I've only been here for about 6 years now, and the growth that I've seen is, I would say, 100% because of the people around me and the people who want to see me succeed, right?
Absolutely.
So yeah, absolutely, definitely echo that message.
So you've kind of gone from the 25 unit space to in Cleveland, at least that's going to be under your $1 million price point. It's going to be a 6-figure price point. And then we see you've kind of got, the next layer in my mind is you've kind of got about $1 million to 5 million, then 5 to 10. And then you kind of get into the space where you are now, where you're talking about the big boys playing with big money. How do you look at that, product line that you're after 100 plus units, 100 to 200 units, when at least from my experience, you have large funds, we'll call them large funds out there competing for the same opportunity. Have you got, a secret to winning those deals you'd like to share with us?
Sure, absolutely. So multifamily right now is extremely competitive, and most deals require non-refundable earnest money. And the first deal that I did that was a larger deal, I had to put about $100,000 non-refundable down, and this was a couple of years ago. I got lucky though, because we here in Houston at that time in 2016, I believe it was, we had the oil crisis, and oil had bottomed out to about $30 a barrel. And Houston is very heavily, Houston's economy very heavily relies on oil and gas. And so what I ended up seeing nobody else making a move. All the brokers were hungry for business. Nobody's buying because everybody's waiting. And I realized that this is my opportunity to jump on a deal and make a name for myself. And that's exactly what I did. I didn't look at this being a profitable venture. I looked at this being a branding venture, if so to speak. And that's just because nobody else was buying. Everybody was hesitant. And I felt like that was the perfect opportunity for me to jump in and acquire 2 deals at that time that I did in Houston. And that was kind of my in. Once I bought those 2 deals and I had those on my portfolio, and I could market that I had purchased these type of deals, the deals started coming to me. I will tell you this: we used to underwrite probably 60 deals a month, and 10 of them would make sense. That is, of course, as you know, that has changed, and we could underwrite the same number of deals, and none of them would make sense today, just because of where we are kind of in the market. So the underwriting process has become a little different since just 2016. However, there are deals out there. There's stuff out there that makes sense, and if we get something on our desk that we like, we typically like to jump on it at this point. And the way we get access to that is we try to put non-refundable earnest money to kind of beat the big boys out of the deal, because they will not put they will not risk that kind of money if they're bigger, and and they have a lot of reporting that goes behind that. So the deal structure is a little different. I think eventually what will happen with us is we are going to fall under those same compliance kind of laws. But as of right now, building a brand, it seems to be building a reputation and a brand seems to be number one priority. And that's what kind of got me through the door. It was when nobody else was buying. I jumped right in. COVID-19, March, I put a deal under contract. I believe if it wasn't for the pandemic, I don't think I could have gotten access to that deal that I put under contract. So I'm really happy with the deal. The debt structure has changed on it. However, the way I look at it, it is just a way for me to kind of get into the deals that I like.
Yeah, so I mean, it looks like you've got a great approach, and like it's the right kind of aggressive. You know how the numbers work. You're doing your own underwriting, and your risk reward appetite seems to or the instinct that you have now with some experience is working. So on this show, I didn't coin this phrase, but I love it, where success leaves clues, and the opportunity to speak with a lot of different real estate investors. Your story is very, there's the common thread that's leaving the clues. I mean, how important was it for you to do that 24 unit deal, manage it yourself, literally get your hands dirty, and then you had the maintenance guy person on site, right? That's about what a 24 unit building generally has. You're looking for those people. They're out there, they exist. But how important was that experience to have then to give you the confidence you have in looking at how you're going to manage something 4 or 5 times bigger?
So I think the experience was vital, because, and it was an education more than an experience. I think I look at it as if I earned a degree in syndication and asset management and property management, all in maintenance support. I did some of those jobs myself, if I thought they were easy and if I could save a couple dollars. I remember this one time I installed an air conditioning unit for one of my tenants, and I didn't think I needed to pay anybody else to do it, and so I YouTubed how to install that window AC, and I just did it myself, because the HVAC system had gone out in that unit, and so it needed to be replaced. So the way I looked at it was, I'm gonna pay to install this unit, and then I'm gonna pay a professional to come and install the HVAC. I might as well save on one of them, right? And these kind of events help us educate ourselves a little better on how to manage the money, how to make the deal cash flow positive. I don't think I made any money on that first 24 unit deal as far as cash flow. However, when we did sell it, we 2x'd on the return. But I would have enjoyed a little bit of cash flow. It's just that because it was a learning opportunity for me, I wasn't too bummed about not making money every month on the deal. I was looking at the bigger picture. I always knew that this is something that I want to do. I want to grow, and for that, I was willing to give up any monthly income that that I could get from it. On the GP side, of course, the investors, obviously, everybody got. So when I say no cash flow, you have to understand that on the GP side, there was no cash flow. The investors were still getting paid. And that is, I think, something you need to prioritize, especially if you are just entering the multifamily space and using other people's money to do it. You have to make sure that you deliver on your promise, no matter how that's done in the beginning, at least until you have the right deal size to kind of make up for any added expenses, I guess.
Yeah, I mean, it's the staying power as you grow requires the cushion, I suppose, that when the unforeseen does happen, and we're in that time right now, the investors get paid first, at least in multifamily. I mean, and that's how it works. It's not necessarily because you've got to have that track record of integrity if you're going to continue, right? And so that sounds like an amazing story. Really quickly, what are you working on right now? And well, you have that deal under contract. Have you gotten funding for it yet, or is that been put on hold until the market settles down?
I actually closed on that deal. I had it under contract March 12th or 15th was when we put under contract. We closed on that deal just a few days ago. I do have another deal under contract. I don't think sourcing equity for it is going to be an issue at this point. And so I think we've almost closed out that fund as well. And we are very excited to close on that deal. What I am looking for property outside of Texas. So if any one of your viewers has anything in Florida, in North Carolina, in Phoenix, I'd love to take a look at it. I'm very interested in now moving outside of Texas.
It's fantastic. That's the next step. Well, that's great. And thank you for sharing the story and being so candid. I mean, I think it's a compelling story, and anyone tuning in and listening, there's just a lot to be learned from, the way that Hamza went about building his real estate portfolio and his business, and being new to not only Texas, but to the United States. It's definitely possible if you don't quit. So, there's a couple of questions we wrap this up with that I like to ask everybody. Aside from Robert Kiyosaki's portfolio of books, is there another, nonfiction book that you've read recently that you think every entrepreneur ought to have on their shelf?
Well, I mean, I read a lot, and I have been for the past couple of years. Most recently, I read a book that really intrigued me. It's called The $1 Billion Whale, and it's about the 1MDB sovereign wealth fund, the Malaysian sovereign wealth fund. And I just found it to be a very interesting book on how one person can go from 0 to 100 very quickly. Obviously, that book didn't end well. I don't know if you heard this, but a very scandalous situation and lots of fraud. And the main character in the book is a fugitive as of right now. But nonetheless, amazing content in the book. I definitely think it's an important read. Lots of factual material in there on how you can source equity and how you can close deals. And, I think the process is legit. Just the person running that show was not, didn't do it the right way, I guess. But very interesting book. Other than that, what else?
So that takes you into KL. Is this where this transaction was going? Kuala Lumpur, for everyone who doesn't know.
Yeah. Kuala Lumpur.
A fascinating city.
Fascinating city.
It's definitely on the crazy side of your Southeast Asian capitals, for sure.
Absolutely. Other than that, I believe in a little bit in solopreneurship now. I think that's going to be the future, with everybody trying to do stuff remotely and virtually. There's a couple of books on that, but I think the one that started it for me was called The 4-Hour Workweek. That was a pretty good book, I think. Streamlined a lot of processes.
Quite possibly the best book title ever written, Tim Ferriss, right?
Yeah, yeah.
Yeah, for sure. Well, look, is there generally speaking, you're a high energy entrepreneur. Is there a pro tip you have for everybody, to keeping focused and waking up every morning and rolling out of bed and hitting the ground running?
Yeah, I mean, I wake up at 4:45 every day. The first thing I do is go hit the gym, work out. Um, I would say 90% of my work is probably done before lunch. So I have a very lax schedule. It's very intense until lunch, but once lunch is over, things are fairly laxed. A pro tip I have is surround yourself with the right people. If you feel like people genuinely care about you and want to see you be successful, spend more time with them. If you feel like if you don't feel that energy coming from them, I would do one thing that I do one thing now that I didn't used to do in the past, which is I will try to minimize or have minimal contact with people who I don't feel are in the same boat as I am. And I think that's contributed a lot over the past 2 years to some of my success.
Yeah, I mean, I subscribe to that. You wanna see the people around you be successful, and I'm a cheerleader for everybody, but you have to be aware of the folks that are not helping but hindering might be a way to look at it, right? There's a lot of ways to look at that, but I agree. Well, cool. Well, I really appreciate you reaching out and joining me today. I know your time's valuable, and if you just give me I lost you. Are you there?
Yeah, yeah,
All
I'm
right,
here.
perfect. Zoom, folks, Zoom.
Yeah.
The app is forever changing in a good way, But all right, well, there you have it, folks. I want to say thanks to Hamza for joining us in the locker room today. Where can our audience find you? Are you a social media guy,
I
or
am. I am a social media guy. Sorry about that. I'm getting work calls. Um, you can find me on YouTube. I have a YouTube channel. My handle there is H-Town Hamza. I walk all my deals and how business works and show people how to get started there. You can also find me on, I guess, Instagram, same handle, H-Town Hamza as well, and LinkedIn, Hamza Ali.
Awesome. Well, I'll make sure that I connect with you in all of those places, and we'll have those links up in the show notes. So everybody out there tuning into this episode, number 96, thanks again for listening. Make sure to check out the Real Estate Locker Room Show on iTunes, Stitcher, Google Play, and hit the subscribe button. We're also on Spotify. I post the video series on my YouTube channel. And make sure you hit the subscribe button so you don't miss out on any pro tips from our guests like Hamza. If you like what this show is all about, the online currencies these days are reviews, so please leave us one. And that way other like-minded real estate folks just like you will be able to find this show when they're searching for content online. The post-game show notes and links to Hamza, his Gray Spear Capital, and other great things will be johncarneyonline.com/podcast episode number 96. Feel free to drop your name into the sign up form there. We do not send much out, but if we do, it's generally super valuable. Remember to stay focused on your goals, have fun, stay in the game. And my name is John Carney. And until next week, work hard, play hard, and raise the bar. And again, Hamza, great story. I really appreciate you taking the time to share it with the audience today.
Yeah, thanks for having me, John.